Welcome back my friends. Let's talk about why you should have some Tesla stocks in your portfolio today. I'm back here with a follow-up video on how you should invest in your 20s. I'm explaining why and how exactly Tesla will be the biggest company dethroning Apple, and I'll be here to let you copy my homework, so stay tuned. If you're new here to the channel, welcome. This channel is about educating you guys on finance and investment. You can help me out by liking this video so that this video reaches out to more people. If you want to show further support, you can do so by simply subscribing to my channel and ringing the bell button. So what makes Tesla dominant and why should you own some Tesla stocks yourself? It is because they are innovative, they have engineering supremacy, design genius, and proof of concept. Tesla is currently the most innovative company. They start working on things through first principle thinking, tackling the traditional way of doing things and asking themselves if they can do it better. Examples of these are 4680 cells, single-piece casting, and full self-driving. The world will adopt electric vehicles at an exponential pace. The most important component to producing EV are the batteries. Whoever can have the most amount of batteries, and batteries with the best capability, will be able to produce the vehicle with the longest range and the most amount of EV in quantity. They announced on battery days with the up-and-coming 4680 cell with 6 times more power, 5 times more energy, and 16% extra range. They redesigned the cell by making the cell much bigger and reducing parts to find a sweet spot between lowering costs and not affecting their supercharging. They also redesigned the way the distance electrons have to travel to make distance much lesser. Shorter path length equals to less resistance equals to more power. And the battery pack is now tabless. In layman terms, it is the way they pack it. Now it reduces weight, and the power to weight ratio is much better than the previous models. This gives the car extra range before you have to charge it. I can go on about wet process electrodes skipping straight into dry powder into film. 7 times output because they changed the way of doing things. Using inexpensive element as anode material, reducing processing costs for cathode. But yes, you get my point. Tesla is addressing every single issue that can be improved and change the way we fundamentally do things. All of those above mentioned reduces the cost of capital expenditure, reducing production costs and improving the profit margin of their cars. Mind you that their cars before these upgrades were already years ahead than their competitors. Their only competitors are themselves. So let's talk about Model Y gigacasting. Model Y has actually a much better profit margin as compared to Model 3. Tesla now uses the biggest hydraulic press in the world. Instead of making 79 individual parts for the body, it is all combined into one single part. Traditionally, every single part needs to be welded to form the body. It is a waste of time, waste of labor, waste of machine joining these parts together. With gigacasting, they take away the machines, increase output, increase profit margin. So why don't other car makers do it as well? You need special alloy made in-house by Tesla to do it, and that requires material science. Car makers also have to change the entire design for single-piece casting to work. The cost will keep going lower and lower. Traditional car makers will be making losses trying to produce electric vehicles. Now let's talk about full self-driving. Countless hours are spent on driving and productive things can be done if the car drives itself. If Tesla is able to solve full self-driving, $10,000 software will be sold to the mass market consumers. That itself will be groundbreaking. But also, full self-driving enables Robotaxi, which means transportation costs are significantly lowered because you remove the cost of a taxi, which are the drivers, the petrol, and maintenance. When cost of transportation is cheaper, the demand for taxi will be higher. Tesla will operate a Robotaxi fleet, and consumer partners will use their cars as Robotaxi. Tesla will then take a platform commission fee. The software revenue from selling these cars and platform fee of Robotaxi will be exponential with relatively low cost. What matters is how much cars can be produced and the demand for full self-driving itself. So how much Tesla cars are produced is the key component we have to look out for. Tesla further lowered the cost of needing to hire software engineers by building a supercomputer, Tesla Dojo. It is a machine learning supercomputer powered by neural processing unit. Traditionally, if users with full self-driving beta encounters a fault, the data gets sent to Tesla and the software engineers correct the problem, supervising the learning. With Tesla Dojo, it becomes unsupervised learning, no longer needing interference from humans, further lowering the cost of operating a self-driving service center. If you want to learn more about Tesla AI, I think James Douma is the go-to person. I'll link a video down in the description for your further research. Limiting Factor teaches the engineering side of things. I'll link the channel down too. In conclusion, traditional automaker will have trouble switching over from gasoline cars to electric vehicle. Because Tesla have been working on electric vehicles for 17 years and they have gotten leap ahead, driving costs of batteries down by redesigning and improving battery technology. Traditional car makers cannot keep up with the speed, cost, efficiency, and vertical integration of a fully autonomous, self-driving electric car. We know that with Wright's law, every cumulative doubling of units produced costs will fall by a certain percentage. Tesla will continue driving the price of EV down, and competitors will not be able to compete in price, range, functionality, and full self-driving. So in short, traditional car makers are screwed. How about the up-and-coming EV companies? Well, just a gentle reminder, prototype is easy to make. Producing in mass quantity is hell. They must also have enough batteries to be able to produce what Tesla is able to produce in quantity. Next question, Tesla's price to earnings. Heck, if Tesla wanted low PE, they could have already done so. The PE looks distorted because they're expanding and spending on capex to build more gigafactories and machinery to increase their output. And this is exactly what Amazon did, focusing on their growth and created their own monopoly. A few will understand this. Tesla will displace traditional car makers just like how Apple did to traditional cell phone manufacturers. So with that few points, I hope I can convince you on my thesis of Tesla. If you like what I've shared, do help me out by clicking the like button. I'll see you next week.